Alright, Trader Coach Carver here, and in this video I'm going to be showing you how to read Japanese candlesticks. Though it doesn't necessarily have to be as hard as reading Japanese, and maybe pulling up your first chart may look like it's Chinese, it doesn't need to be that hard. So what I'm going to do in this video, I'm going to break it down. What are candlesticks? How do you read them? And then just going over some of the basic, different types of strengths within candlesticks throughout the market. So guys, let's go ahead, let's jump into it, and I'll see you on the other side. Now when you first pull up your chart, it's probably going to look something like this. All right, got a bunch of different candlesticks here going on. I'm currently on the Euro USD, which is Euro versus United States dollar, and I'm on the 4-hour time frame. So what that means is each and every single one of these candlesticks here represents 4 hours of price action. Now, if we come in a little closer, you can see there's a bunch of different types of candlesticks, and looking at them, yeah, it may look like a foreign language. But what I want to do is I want to really just simplify that for you guys in today's video. Now let's go ahead and let's take a look at the anatomy of a candlestick, right? A candlestick consists of a wick, which is also known as a shadow, and a body, right? Now what information can that give us? Represented on the outsides here, you can see that it gives us the open, the low, the high, and the close. And on a bearish example, it'll give us the open, the high, the low, and the close. Now, what is the real difference between these two candlesticks, obviously besides color and their label? Now, to put this as simply as you can, when you take a look at a candlestick, right, when price closes above the open, it is considered to be bullish. When price closes below the open, it is considered to be bearish. Now, how is it that this would work, right? Let's say we were on a fresh chart and this candle just opened up. We're still on a 4-hour time frame. What would happen is over the course of this 4 hours, it would give us this information. Price would simply open up here and it would start to work its way down. It would create our low, start to work its way up. We'll get an influx of buying pressure where price is just starting to really push up, creates our high, and eventually work its way down and settle and then close. Now, once that candlestick's closed, a new candlestick would open in the same process that we did down here. And then from there, it would indicate whether it is either bullish or bearish, right? Start to work its way up. Now, in a bearish example, you can see that, price would just simply come up here. Let's say price opened up. It would work its way up. It would typically find a high. And then it's going to come through and price is going to come down, create a low, and settle and create our close. Now that gives us 4 different points of information. We have our open, we have our high, we have our low, and we have our close. And since price closed below our open, that would indicate that price is going down and that this candlestick is in fact bearish, right? Now what I want to do is I want to go through, and if you fully understand this, feel free to pause the video, feel free to screenshot this. If you need to keep this, anywhere simple, do that. But now what I want to do is I want to go through and I want to talk about the different types of candlesticks, right? The different strengths of candlesticks and what these wicks and what these bodies really mean, right? Because these are going to be your 2 basic candlesticks that you're going to see. Just a simple, wick on both sides and a body there in the middle. Now let's go through, let's jump in and let's take a look at the actual strengths of candlesticks. All right, now within this diagram here, I've went through and I've laid out the list of most bullish all the way to the most bearish. Now let's go ahead and let's take a look at why it is that this is happening, right? So with this candlestick here, it is indicated as the most bullish, and is very simple because the price would just simply open up. There is no working its way down, finding a low. Price just literally opens up and just straight goes up, right? And that's typically going to create like an imbalance or a fair value gap, and we'll talk about those later on in further examples. But this is going to be your most bullish candlestick, and that's just simply because there is no selling pressure whatsoever. Price simply opened up and it went to the moon, right? That is your most bullish candlestick. Now let's take a look at the second most bullish candlestick, right? And what happens with this one is it opens up all the way up here and it works its way all the way down, has that selling pressure all the way down. And what happens is it typically finds an area of demand or a point of interest that is going to, reverse price, and you have an influx of buyers coming in, and price is going to be pushed all the way back up after coming down, and then it's going to close up top there. Now, even though this is, price closed below our open on this one here, we have such a massive wick and what we call order consumption, which we'll get to in further modules, that this really just, price just was rejected down here and you had an influx of buyers coming in. That is the second most bullish type of candlestick because it was almost all buying pressure there, right? Here's a normal candlestick like we went through in the first diagram. Now we're starting to get into our dojis, our indecision, right? Where, it's kind of like neither here nor there. It opened up and price, closed a little bit above where we had opened, right? In this example, price would open up, work its way down, grab ourselves a high, and then just kind of, you know, settles back in here and closes. Now this is where you're starting to get a lot of indecision. This is where you're having like battles of bulls and bears, and you know, you're going to see this a lot within the markets. Even more so on this one, price didn't really have the opportunity to go up like it did here. It just kind of closes around the same point that it opens. That's another indecision candle. That's what we call a doji. Same thing over here on this side. Price opens up here, right? Works its way up, works its way down, and just gets a little bit of a gain there on the bearish side. You know, just moves down a little bit, closes. That's like a neutral bearish candlestick, right? Coming back into the normal bearish candlestick, same example as before. Price opens up, creates her high, comes down, creates her low, and then just kind of settles. That's just a normal bearish candlestick. Now, again, even though this one is represented in green and price technically closes above our opening, this is still our second most bearish candlestick. And again, it's the same as before. Price is going to work its way all the way up. It's going to find some level of supply or something that is reversing price. Maybe it's mitigated an imbalance or an order block, something where a surplus of sellers come in and it just forces price all the way back down, says, nope, not today, not happening. And then you see price come down and it closes below here. Now, even though this will, you know, be the same color as one of your bullish candlesticks, there is massive order consumption here, which indicates that price may reverse, right? And then our most bearish candlestick is going to be pretty simple. It just simply opens up all the way up here to the top and just works its way all the way down. So now that we've gone through and we've talked about the basic anatomy of a candlestick and we've gone through some of the strengths, what I really want you to do is start to practice this, right? Start to train your eyes for it, start to understand it. Pull up any chart, any time frame, and I want you to just work your way through it and start to understand. If you need to pause the video here, take a screenshot of these different strengths, feel free to do so. But now I want to go through and show you guys this homework assignment. So once you've went ahead, you pulled up whatever chart it is that you're looking for. You can pull up any chart, any time frame. Now what I want you to zoom in and do is just start to identify what's going on. Break down the different candlesticks, right? So as we zoom in here, I want to go through and I want to break down each of these candlesticks, and I want you to go through and I want you to do this. I want you to truly understand. So if you can come in here, you come up to the top, you guys will be able to find an arrow tool. Just drop that sucker anywhere on the chart, and then I want you to come in and I want you to start to identify these candlesticks, right? So we'll start with this candle here. Price opened right here, worked its way up, gave us that wick, came down, and then closed. Our next candlestick open, created our low, had a lot of bullish pressure, gave us a bullish engulfing candle, came up, created a high, and then closed. Another candlestick here opened up, gave us a little bit of a micro retracement, gave us that wick there, worked its way up, and then closed. Next candle open, low, high, close, open, low, high, close. Now you can see we're starting to shift a little bit. Price opened up, gave us a little bit of a wick there, some order consumption, push down, and then close. So now we're starting to see a little bit of retracement. See another candlestick open up, give us that wick, give us that high, low, close, open, low, high, close, open, low, high, close. Price opened up over here, gave us that high, worked all the way down, gave us a close. Now we're starting to get into some of that indecision. This is where we're talking about, you know, some of that battle, that bulls and bears. Price opened up here, worked its way all the way up, worked its way all the way down, and then kind of settled. And then we're starting to see some more buyers coming into the market. All these wicks on the bottom side, order consumption. We'll jump into that again in later modules, but still rolling forward. You just come through. I want you guys to do this. I want you to understand each candlestick, understand where the open is, where the low is, where the high, and where it closed. Understand why it's actually printing this, because this is going to help you out in our further modules when we're showing you how to draw order blocks. You need to know where the open is. You need to know where the low is, the high is, the close is. This is one of the most basic things that you can go through and you can do on any chart. I'm on a Forex pair. You can pull this up on a metal. You can pull this up on a stock. You can pull this up on crypto. It's going to be the same thing. Open, high, close. No low there. That's just a massive bullish candle. What happened? Immediately opened up, went all the way down, worked its way back up, and closed. Boom. Open, low, high, close. Guys, just go through this. Mark through the charts. Understand what's going on, and you can start to see how these candlesticks move. Once you can start to identify properly the open, the high, and the lows and close of each candlestick, and you can start to see the different strengths of these things and how they're playing within the markets, you'll be ready to move on to the next session. I say go through and do that for like 15, 20 minutes. Once you guys have like a full understanding of what this looks like, you guys will be ready for the next module. And that's where I'll see you guys. See you in this next video.